Good day, grade 12 learners. My name is Mr. Simbi, and welcome to today's accounting lesson. This lesson is brought to you by the Gauteng Department of Education in collaboration with Saibono. Today is going to be a very exciting lesson because we are preparing for paper 1, as you're quite aware that the examination is already here. So as we are preparing for paper 1, there are aspects that I'm going to be talking about today. So I want you to stay tuned. But you know what we must do. You must have a calculator. You must have your pen. You must also have some of the papers that I'm going to mention here if you already have them. All right. So I want you to sit somewhere comfortable and then we're going to start working. All right. Now, in the previous lesson, we have covered the statement of comprehensive income as well as the statement of financial position. This was covered in the previous lesson. But in today's lesson, I'm going to be looking at the calculation of the correct net profit after tax, and I'm going to integrate that together with the balance sheet. All right. And then I'm going to look as well at the cash flow statement. This is very important. And then I will be looking at the calculations for the financial indicators. Now, I want you to look at some of the past papers that you might be having, especially the 2022 prelim papers. I'm going to be working over a number of 2022 prelim papers of different provinces, including Gauteng as well. So our first activity, which is activity number 1, is going to come from the Eastern Cape prelim paper for the year 2022. All right, if you're ready, let us start. Now, I'm going to be focusing on question 1.2. All right, as you can see on your screen, it says you are provided with information for the financial year ended 30 June 2022, and then required. Refer to information A and B. Use the table provided to calculate the correct net profit after tax. So this is what I'm going to be focusing on. We want to be able to calculate the correct net profit after tax for the year ended 30 June 2022. And then here are the instructions of the examiner that we must indicate with a plus for an increase and then a minus for a decrease. All right. And this must be done for each adjusted amount. And this question was for 17 marks. I want to show you in today's lesson how easy it is for you to get these 17 marks. Let's see what more information was given. We are given the list of balances, that is before taking into account the errors and the omissions that were there. And then we were also provided with the net profit before tax of 3,199,890, as you can see here. And they are telling us that this was calculated before taking into account the correcting the following errors. Let us see the errors that were in the paper. The first one, number 1, the following stock items were omitted from the annual stock take figures. And then they say, note, the specific identification method is in use for stock valuation. In other words, it tells you that you cannot prepare for paper 1 and not also look at your inventory valuation methods. As you can see here, we have the specific identification method. I've seen in another paper where they also have the FIFO method. In the other one, they had the weighted average method. So that means you need to know these methods before you can come for your paper 1. All right. So let us see, are we given more information? And then we are told that during the year, the stock on the 30th of June 2022 is as follows. But we are being told that this was omitted from the annual stock take figures. In other words, the amount that we're given in the trial balance did not include this information, as this was omitted. So what we can see here is we have televisions, all right? And then on our televisions, we had 1,200, and then the unit price per TV was 7,000. Now, keep in mind, we are using the specific identification method. So of the 1,200 televisions that we had, we have sold 1,118, as you can see here. That means now in our stock, if we say 1,200 minus the 1,118, we will have how many TVs on hand? You end up with 82. So here you're going to end up with 82 TVs on hand. And then you will remember that when we use the specific identification, a particular product or a particular type of stock will be identified with its own cost price. So with the televisions, the unit price in this case is 7,000. That means you're going to take now your 82 units, you multiply that by your 7,000 rands. That should give you then the value of closing stock. If you multiply that, please punch that in your calculators. You're saying 82 multiplied by 7,000, and you should get something that is 574,000. 574,000. So we have two different products here. We have our TVs, and they are 574, and we have microwave ovens, which are 297. But if you look deeper into the microwave ovens, you will see that we had 2,000 at the beginning, and then we have sold 1,800. Mathematically, if we say 2,000 minus 1,800, we should be having 200 units. However, we can see here that we are having 198. That tells us already that we should be having some missing units. All right, so remember, we are calculating amounts so that we can show them in the correct net profit calculation. So already we can see that number one, with our televisions, we are okay. But when we come to the microwave ovens, we have some missing units. Okay, how many units are missing? We're missing 2 microwave ovens. Okay, that is, we're supposed to have 200, but we have 198. So we're missing 2 microwave ovens. And then each one is costing 1,500. That then means if you look at your microwave ovens that are missing, it's going to be an amount of 3,000. All right. So if stock is missing, remember, it is an expense to the business. Therefore, it means when we did our profit calculation, this aspect was not considered because the adjustment says it was before taking this into account. So in this particular case, our profit therefore is overstated because there is an expense that we have not yet recorded. All right. I want you to see this then. If we come here, you will then see that here is my 2 that are missing. And if I multiply it by the cost per unit, which is your 1.5, I end up now with my 3,000, which is my stock loss. So if 3,000 is my stock loss, remember, I must then show it. And let's come and see how we will show it. It is very important that you know that your stock loss is an expense. All right. Hence, it will have a negative effect on our profit. So when I come here now, I'm coming now to my incorrect net profit, which is my 3,199,890. And then I'm subtracting now the 3,000, which is my stock loss. You remember how we got the 3,000? We had 2 microwave ovens that are missing, and each one was for 1,500. So we are going to have the 3,000. All right. Now, it is very important that when you do this, I'm going to be incorporating the balance sheet as well, the statement of financial position. So on every aspect that I'm going to be touching, I will be bringing also the statement of financial position. The question in its original state, it was designed that you can do the correct net profit calculation as well as the statement of financial position. So we want to see, if we go further, what effect does this adjustment have on the statement of financial position? Let us then see. Remember, we are having 82 on hand. I've already alluded to this. And then we remember that it has a cost price of 7,000. There's the 7,000. Multiply by my 82, that gives me my stock on hand of 574. All right. So I now have 2 aspects, which is my televisions, which now is 574. But I also have my microwave ovens, which is 297,000. Now, you then see if I add the two stock values, that is the 297 plus the 574, I end up with 871,000. 871,000 is an amount of our inventory that was not taken into account when we did the physical stock count. Therefore, it means the amount that we have in the trial balance is missing this particular amount, if I can say so. What then do we do? If I am going to look at my statement of financial position, I must now take the amount in the trial balance, which is my 2,757,000. Then I add the amount that was omitted, which is the 871. Remember, 871 is a combination of the 297, which is for the microwave ovens, and the 574, which is for the television set. So in my statement of financial position, I should end up with my 3,628,000. That is how it should end up as. All right. Now, I want us to go into the next adjustment that was in the paper. All right. So the next one is the provision for bad debts. So we're given provision for bad debts. This is in the list of balances. And then it says the provision for bad debts must be increased by 1,450. So you have to understand that in this particular case, we are doing both items. We are doing the correct net profit as well as the statement of financial position. So I'm going to start off first with my correct net profit. Remember, once provision for bad debts is increasing, an increase in provision for bad debts is an expense. An increase in provision for bad debts is an expense. And the opposite therefore becomes true, that a decrease in provision for bad debts is income. All right. So here I'm told that I must increase. All right. So the moment I increase and they give me the by. All right. So if I'm increasing it by, that means that is the adjustment amount. Remember, in the income statement, we are bringing the adjustment amount. So here my adjustment amount is 1,450, which is an increase. As I've said, an increase is an expense. Hence, you see here, I've said minus 1,450. Why am I saying minus 1,450? Because an increase in provision for bad debts is an expense. Therefore, it is going to decrease the profit that I had incorrectly calculated. Hence, you see, I have a minus in this case. But then we also need to understand that this must be adjusted as well in the statement of financial position. So in my statement of financial position, the adjustment, remember, is still the same, that my provision for bad debts must be increased by. That means in the previous year, I had a provision for bad debts amount, which was 78,300. That particular amount, I'm being told that I must then increase it. I must increase it by 1,450. So if you're having your calculator close to you, you should already be saying your 78,300 plus your 1,450. So once you add that one, remember we are adjusting it now in the statement of financial position. When you come here it is now under your trade and other receivables. So you're going to take your 78.3, which is the previous year. Now we are adjusting on that by increasing it 1,450. And then you end up with your 79,750. Remember, it's an increase, hence we're adding it. If it was a decrease, we're going to come and subtract it. All right, if it was a decrease. Let us continue now and see the next adjustment. It says, refer to the following pre-adjusted accounts rather. Nominal accounts section. And then we have director's fees. Let's hear what is the story with the director's fees. It says, the company has 5 directors, very important to note, who earn the same monthly fee So these 5 directors, they all earn the same monthly fee, and they were entitled to a bonus. So one of the keywords is the same monthly fee. All right, the same monthly fee. Already the examiner is trying to guide us to get the right amount. So we have 5 directors who earn the same monthly fee. They were all entitled to a bonus, and the bonus is equal to the 1 month's fee. So all of them, the 5 of them, they are entitled to a bonus, but the bonus is equal to 1 month's fee. Where is the problem? The bonus of one of the directors is still outstanding. So we are having an accrued expense. At the back of your mind, you must be thinking, if I have not yet paid for one of the directors, therefore it is an expense which is accrued. So I'm owing. The outstanding bonus was not recorded. All right. There are several ways of doing this. I'm going to show you one way with my pen. Then I'm going to show you another way which is already typed through. All right. So the first way is to say, if we have 5 directors and one of them has not received the bonus, that means the 4 directors have received the 12-month director's fees plus the bonus. So 4 of them have received for 13 months. 4 of them have received for 13 months. So if you say 4 by 13, it should give you an amount which is 52. All right. Now, the 5th director, which is one guy here, here's the 5th director. He has not received for the 13 months. He has only received for 12 months. His bonus is still outstanding. That means I'm going to have 12 here. So it's going to be 1 by 12. So, which is going to give me exactly 12. So the amount of months that I have paid for will be 52 plus 12. That will give me a total of 64. Then I can safely say, if I take my director's fees, which is 992,000, if I take my 992,000 and I say this is divided by 64, all right, it will give me an amount which should be 15,500. Please punch that in your calculator. I want you to tell me how much are you going to get. All right, I'm waiting for you. How much are you going to get? All right, someone is saying, Mr. Simbi, I'm getting 15.5. Thank you so much. Now, when you get that 15.5, remember now, this is going to be adjusted. All right, number one, we're going to adjust it in the incorrect net profit calculation, and we must take it as well to the statement of financial position. This was one way of doing it. Let's see if I can give you another way. The other way is to say, for 12 months, we have paid 5 guys because all the 5 of them, they have received for the 12 months. So 12 months by 5, and then remember, only 4 have received the bonus. So it's 12 by 5, which is going to give you 60. Then you add the bonus for the 4 other directors. That gives you 64. The same as the 64 here. So 2 ways of doing the same thing. And then once I get that, I then say my 992,000. Remember, we were getting that from here. Here's my 992. Then you divide it by the 64. That gives you your 15,500. Exactly the same as I had calculated down here. Now, let's see how we are going to show this now in our correct net profit calculation. In our correct net profit calculation, we are bringing now the director's fees 15.5. Remember, this is an expense which was understated. Therefore, it is going to be recorded in a way that is going to decrease now our profit that we had recorded incorrectly. So the sign, therefore, will be a minus. Most of you guys make mistakes with this aspect. Remember, once an expense has been understated, the profit will be overstated. Therefore, the corrective measure is to decrease that particular profit. The sign, therefore, will be a minus. Okay, let's see how would this appear now in the statement of financial position. Our calculation, remember, will remain the same, but when we are looking at it now, we'll now say, how is this going to appear in the statement of financial position? Accrued expense. So it becomes part of my trade and other payables. So it comes to my note number 9. What do I say? Accrued expense, that is my director's fees. I'm bringing that 1 month. We are still owing for that 1 month. So I say 15,500. Okay? Are we still together? Thank you. All right, let's go on to the next aspect. It says rent income 76,000. Let us hear what more information are we given. Rent for May and June, this is 2 months, in 2022, has not been received. This has not yet been recorded. Note that the rent increased by 10% per annum on the 1st of June each year. Now, it is very important for you to understand now the time period at hand. Time period at hand. All right? The financial year, when is your financial year ending? Things like that will help you in this particular case. But let us listen to this. That rent for May and June has not yet been received. And then note that the rent has increased by 10% on the 1st of June. All right. So for how many months then have we received the rent? So we have the 76,000 here. So rent for May and June, which is the 2 months until we get to the end of the financial year. So the financial year is ending in June, but we have only received for the other months except May and June. So your financial year is how many months? 12 months. And if you subtract the 2 months that you have not received, that means you have received for how many months? For 10 months. In other words, this 76,000 is equal to 10 months. Are you still following me? Okay, so you can then say my 76,000, which is for 10 months, how much then will be the rent per month if we have received 76,000 for 10 months and the increase has not yet kicked in? The increase only starts in the month of June. So that means my 76,000 divided now by the 10 months. That gives me my 7,600 per month. Okay, so the month of May, rent has not yet increased. So May is going to be 7,600. The question then comes with June, because we are told that rent increases by 10% on the 1st of June. So if rent is increasing by 10% on the 1st of June, there are two ways, several ways actually, that you could have done this. But I'm going to try and do it in the faster way, whereby you now say, before any increase, 100%. You remember that one. Thank you. So if you add a 10% increase, you're going to be having 110. So you're having 110 here. 110 over your 100. Remember, I'm now doing the UK method. What you want, I want the amount after increase. Hence, 100% plus 10% to give you 110% over what I have, which is the 100, multiplied by the amount before any increase, which is 7,600. Please punch that in your calculator. I see some of you are already busy. I want you to tell me how much are you going to get. Yes, someone is saying, say I'm getting 8,000. Say it again, 8,360. That becomes your rent income in the month of June. So we are having 2 months in this case now. We're having May, and the rent in May is 7,600. But we also have the rent in June, and the rent in June is 8,360. If we add these two, how much do we then get? All right, thank you. Someone saying we get 15,960. 15,960. Therefore, we are going to adjust this one. But let me show you the other way that you could have done this as well. All right. So here is my the same calculation that I just showed you, and then you will then find that once you have your 15,960 here, already, and then you will then show it as rent income. Remember, it is income that was not yet recorded. Hence, our net profit was understated. So if we're going to correct it, we're going to go and add that particular income. So we're adding the income. Hence, you see the plus sign. Okay? How would this appear now in the statement of financial position? What are we dealing with in this particular case? Remember, we had the 7.6. We've already dealt with this part. And then we already have the 8360. And then we have our accrued income of 5960. The moment I say accrued income, already it lights up the room. You already know where you're going to put this. Where you're going to put this, you should put it in the statement of financial position. It should appear under your receivables. I think you saw that already. Let me go on to the next aspect. It says, refer to the following pre-adjusted accounts. Then we have advertising, which is 54,000. And then it says, advertising contract of 12,400 was paid for the period 1 March 2022 to 31 October 2022. The prepaid portion was not recorded. Okay, so we are given the period 1 March to 31 October. You must use your fingers in this particular case, okay? Or you can write the timeline. You're starting from March and then you're going to 31 October. If you count, how many months do you get? Someone is saying, say I get 8. That is correct. And then these are 8 months from the 1st of March to the 31st of October. But our financial period, you now need to know, when is our financial period ending? Remember, we're dealing with June. So if we're going to look at the period that has been paid in advance, all right? In other words, we are having our March here, and here we're having our October. But our financial year ends in June over here. So the period here is the period that has been paid in advance. How many months is that going to be? Someone is telling me it is 4 months. So of the 8 months, which is this 8 months here, 4 of them have been paid in advance. So what is it that we want? We want the 4 over 8 of the 12,400 of the 12.4. All right. So once you get that, you will see here is the 12.4. This is another way actually of doing the same thing, but you come back again to your 6.2. Here you're simply saying 12.4 divided by the 8, which is the same 8 months here. Then you get per month, and then you multiply it by the 4 months which are paid in advance. Or you can simply say 4 over 8 multiplied by 12.4, and it will still give you the 6.2. Let's see how would this appear then in the correct net profit calculation. This is a prepaid expense. In other words, the expense was then overstated, that then reduced our profit. The moment we are going to correct it, that means we need to increase our profit because we recorded an expense for the next financial period, which was not supposed to be recorded in this case. Therefore, what do? You come and then you are adding 6,200. That is why you see I've put in a plus 6,200. Okay, let's go on to the next aspect. And then that is now the 6,200 will be recorded as prepaid expenses, that is under your trade and other receivables. So here we're talking of the statement of financial position. Okay, now let's quickly go on to the next aspect. Extract from the loan statement that is received from BBS Bank on the 30th of June. And then we have the information given. So remember, we are preparing the correct net profit. So we need interest. But at the back of your mind, you must know that you're preparing a statement of financial position. So once you do some calculations, they should be able to go into these two aspects. So the interest on loan has not yet been recorded. Please take note of that. And then I'm going to quickly do a loan account. So the quickest way for you to do it is simply for you to know that your loan is a liability. So here I'm going to have my plus. So it increases here and my loan decreases over here. So here it's a minus. So I'm just going to quickly start off with my balance. How much is my balance here? That is your 2,431,400. Okay, but I also have the balance at the end. Okay, so that is BD, and I'm also going to have another BD here. All right, which is going to be this one there, 2,246,000. Okay, so remember, I have my double lines here. Okay, and then here I have my double lines as well. That means here I'm going to have my balance carried down. I'm going to take the same 2,246,000, and then interest then comes here on the credit side. All right, and then remember, that is what we are calculating for. But we've been told that the repayments that include interest are 374,400. So I'm going to come here, I'm just going to call it repayments. I'm going to say bank, and then I'm going to have my 374,400. If I'm to close this thing up, you look for the side with the highest amount. Obviously, it's a ledger account, remember. So you're going to say the 374,400 plus the 2,246,000. You're going to have your 2,620,400. That is 2,620,400. Okay, you should verify this on your calculator. Then you now say your 2,620,400 subtract now your 2,431,400. That should give you interest. Please give it to me. How much are you getting? Thank you so much. Someone is saying 189,000. You get interest of 189,000. Let us quickly see how this would appear in the correct net profit calculation. Here, remember, this is interest expense. So I'm coming here to subtract it, minus 189,000. How would this calculation affect the statement of financial position? In the answer book, we were already given the 185,000. So what you do, you take the closing balance in your ledger account, which is your 2,246,000. You are bringing it here. All right. And then you now say, since we already have a short-term loan, I must subtract it here. Hence, you end up with your 2,061,000. In this question, they wanted to test, do you know that if you have a short-term loan here already, it means you would have subtracted it from there? Because here it is under your non-current liabilities, but here you are bringing it to your current liabilities. As long as the loan is going to be paid within the next 12 months, it ceases to be a non-current liability. It becomes a current liability. Okay. Now, my dear learners, we are almost at the end of this particular question. And then it cannot be over without income tax. Then they say, after taking into account the adjustments or the corrections, it was determined that the business paid 17,400. Listen to the instruction here. 17,400 over. So we were supposed to pay a particular amount, but we paid over. Let's understand this. How does it happen? Remember, there is what we call provisional tax payments, because we only know how much we're supposed to pay for income tax at the end of the financial year. So we do not wait until the end of the financial year. We begin to make payments, provisional payments. So one of two things is likely to happen. We're either going to pay more or we're going to pay less. Okay? If I can use the language that is used in this paper, we're either going to pay over or we're going to pay under. In this case, we paid over. We paid more by 17,400. That means this is too much by 17,400. That should tell us it is easy now to get our income tax. All right? Whatever we paid is more by 17,400. Then it should mean that I should now say my 947,620 minus 17,400. That should give me my income tax, which is 930,220. Where would I show this income tax. Remember, we are preparing the correct net profit calculation. So here's my income tax minus 930,220. All right. So remember, income tax must be subtracted. All right. But then if I'm going to prepare the statement of financial position, what will I do in that regard? In the statement of financial position, this is income tax that has been paid in advance, over, according to the language of this paper. So if it is over, therefore it means it is receivable. Receivable, if you want to put it, SARS, OS, us. So it is receivable. Then you're going to have your 17,400 under trade and other receivables. Okay. Dear learners, we then come to the end of this particular question. Not the end of the lesson, this particular question. All right. I'm going to do another one again, similar nature. All right. So that I can just reinforce some of the basic principles. In the next activity, it's going to be as easy can be. All right. So let's see how the next activity is going to be. So we are now going to look at the Free State prelim for the year 2022. All right. So this one, we're going to be a bit faster. Okay. I still have more things to show you today. Remember, the exam is already knocking. All right. So let's look at the Free State paper. What exactly did they want us to do? All right. Number one, they say Global Trading Limited, that is the name of the business. And then they say the information relates to Global Trading Limited and the financial year ended on the 30th of June, the year 2022. The business uses the perpetual, that is the continuous inventory system, that calculate the correct net profit after tax. Let's hear the information. Here is the information, list of balances and totals. The next aspect was list of balances, and then the first thing is provision for bad debts is 10,600. Let's hear what is given again. The net profit before tax is 1,089,238 was determined before taking into account the following information. All right. And then provision for bad debts must be adjusted to. Okay. So remember in the first paper that we did, in the Eastern Cape paper, they brought provision for bad debts must be, you remember, it must be increased by. But here they are now saying to. You see that? And then what we did, that by, we simply took it to the income statement. All right? But whenever they say to, the to should go now to the balance sheet. That means we need to do the adjustment. We need to calculate whether it is increasing or decreasing. That means we need last year and we need this year's amount. So they're saying provision for bad debts must be adjusted to. That means if I'm to say it in an easy way, you need to know, I'll say last year, the previous year, which is 1 July 2021, it was 10.6. It was 10.6. Then this year, provision for bad debts must be adjusted to. So I'm going to say now, this year, it is 7,800. That means there is an adjustment of how much? Of 2,800. So we can simply conclude that the provision for bad debts has been decreased by 2,800. That is how the Eastern Cape brought it. In the Free State, they brought it as 2. All right? But in the Eastern Cape, they brought it as by. Okay. So in this particular case, remember we're preparing the correct net profit. Okay. So what we want is the adjustment amount. What has it increased or decreased by? Not the 2. The 2 goes to the statement of financial position, the balance sheet. But what we want is the by. What is it increased or decreased by? In this particular case, it has decreased. And when it's a decrease, you remember what I said earlier on? A decrease becomes income. So we're going to get an income of 2,800. We compare last year versus this year. we see there's a decrease of 2,800. It is decreased by 2,800. Okay, so let's see how this would appear then. So remember, my 10.6 minus my 7.8, 2,800. Decrease income. Income, we're going to go and add it to the incorrect net profit. Okay, are we still cool? Thank you, thank you. Let's go on to the next aspect. It says, an invoice was issued on the 30th of June. It is 8,712. A 10% trading discount was allowed. Goods were sold with a markup of 60%. No entry has been made of this transaction. So remember, when we sell goods, here we have already arrived at the net profit, even though it is incorrect. So what we have to consider is, if we are already at the profit, we want to know what is the profit for these goods that we had sold, but not recorded. So our main aspect is to calculate the profit. What was the profit? That is what we want. Okay, so I want you to have your calculator close. Okay, I'm going to guide you. So we are told that an invoice was issued for 8,712. A 10% trading discount was allowed. So this was not the initial amount that the goods were supposed to be sold for. The initial amount was supposed to be 100% in its fullness. But then we then gave a 10% discount. That means we ended up with 90, which is our 8,712. How much was it before we allowed the discount? If you do that, how much you get in your calculator? 9,680. Are we still okay? And then this is what we're supposed to have sold the goods for. All right. Now, we are then told that the goods are marked up at 60%. We want to see how much is the profit in these goods. All right. Then we'll now say my 9,680. Now, what I want is the cost. What was their cost? Because whatever I sold them for, if I subtract the cost, what remains? The profit. So I'm going to take what I sold, what they were supposed to have sold for, so then I can get their cost. What was their cost price? That is where I'm going now. So remember, cost is always 100, but these goods are being sold at 60% markup. So that means what I have is 160. If I say 9,680 multiplied by 100 over 160, how much do you get, guys? Someone is saying 6,050. So this is the cost. This is the cost of the goods. So I now know that these goods that I have sold these goods for 8,712. But their cost is 6,050. So if I can get the difference between these two amounts, it should give me 2,662. That should be the profit, therefore, on this invoice that was not recorded. In other words, my net profit is understated because there is profit that I had not recorded. What should I do then? I should go and record that profit. Okay, so here's the calculation. Very simple and very same thing. So I will come and say my incorrect net profit, please let me add the 2,662. So I add now the profit that was not recorded to the profit that was incorrect. Okay, let's quickly go on to the next aspect. Number 3, it says, the auditor discovered that the trading stock deficit, this one is an easy one. The auditor has discovered that the trading stock deficit of 5,600 was a trading stock surplus. So in our books, we recorded a trading stock deficit, but it is actually a surplus. So what then do we do? Remember, it is 5,600. The easiest way is what I'm going to show you. We're now going to come, a surplus is income. So I'm going to come and say 5.6, again 5.6. Remember, the moment you record an amount on the wrong side, you must put it on the right side twice. If you record an amount with the wrong sign, you must put the right sign twice. So we recorded our trading stock as a minus. So in order for us to correct that, we have to go and say plus 5.6 plus 5.6 and then 11.2 plus, because it is a surplus, plus 11.2. It is a surplus. So we add surplus income. All right, let's quickly go on to the next one. The next one then says consumable goods on hand at the end of the financial year amounted to 5,400. What does that mean? Consumable goods on hand. Remember, we would have bought our consumables. It would have been packing material, but then we recorded the full amount of what we purchased, yet our expense was not that amount. Remember, there will always be consumable stores on hand. And how do we treat that? We subtract it, because the expense is not for this financial year, because they were not used in this financial year. So we should subtract that. So here we're told that there's consumable goods of 5.4 that are still on hand. Would we do that? Simple. Would come here, would add it. Why are you adding it, Mr. Simbi? Because whatever we had purchased these consumables, it was recorded in the income statement in its fullness. Therefore, our profit was decreased because the consumable stores expense was big. Why? Because we had not yet subtracted the ones on hand. So the correction then is to say, plus we are bringing back our income, our profit. So we're going to say plus 5,400. All right, I'm going to quickly go on to the next one. It says director's fees. Remember, in the other paper, we director's fees as well. Here's another one. Let's see how these guys brought it. Director's fees paid for the year amounted to 648,000. The company has 5 directors who receive the same fee. One of the directors asked the company to only pay out his fees for the last 6 months in July 2022, when he plans to go on an overseas vacation. So what it means is we're going to apply the same principle we applied earlier on. However, I'm going to show you again another way. All right. So take it as simple as it should be. How many directors? 5. What is happening? 4 are getting their full director's fees. That means 4 are getting for 12 months. That is 48 months. But the one guy is saying, I want to save my money. Give me my 6 months director's fees in the next financial year. So that means times 6. So we've paid him for 6 months only this year, because the other 6 months will be paid in the next financial year. But remember, when is the expense being incurred? That is where I'm going to come. 48 plus 6, that gives you now 54. All right. Now, you then come to your 648,000. Your 648,000. All right. 648,000. For how many months are in there? It is 54 months. Then if you divide it by 54, it should give you an amount per month. That is 12,000 per month per director. And the director in question has not been paid for how many months? 6 months. How much is supposed to be given to the director? Thank you. 72,000. Okay, so this is one way. So this is an expense that has to be recorded. So if you come here, here it is, 72,000. The expense must be recorded. Minus. Why? Because it is an expense. All right. Let's quickly go on to the next aspect. All right. The next aspect then is saying BE Builders was paid 120,000 for the construction of a storeroom. 90,000 is for the construction of the storeroom. And then 30,000 is for repairs. So remember, we paid 120, 90 and 30. 90 for the construction, 30 for repairs. The entire amount was debited to the land and buildings. They're already telling us it was an error. Why? Because 30,000 is an expense. Repairs are an expense. They must not be debited to the land and buildings. They are not an asset. they are an expense. So they should have gone to the repairs account. That means we now need to record a particular expense. What is the expense therefore? The expense is repairs. Let's see. In our incorrect net profit, there it is. So we're coming to say minus 30,000. We are recording our repairs. Let's quickly go on to the next aspect. It says rent for July is 3,300 received in advance. So rent of 3.3 was received in advance. This is rent that has been received in advance. Okay, so what does that mean? It means our profit was overstated. How do we correct it? Minus 3,300. We subtract. We are decreasing our profit by 3,300. All right. Then advertising includes a 6-month contract of 7,200 with a local newspaper. This amount was paid for the period 1 May 2022 to 31 October. So remember, here in this particular question, our financial period ends in June. So here it ends in June. So you are now going to say the advertising contract, all right, includes the advertising includes a 6-month contract for 7,200, all right, and then this amount was paid for the period 1 May 2022 to 31 October. All right, so if you count from 1 May to 31 October, how many months is this? This is going to be 6 months. Are you still with me? And then you will now say the period, therefore, that is going beyond June. How many months is that going to be? So you're counting now from July to which month? October. July to October. That is going to give you how many months? It's going to give you 4 months. All right. So what do we need? What we want is the 4 months over the 6 months multiplied by the 7,200. Okay. And then how much do you then get? As you punch that in your calculator, let me show you exactly. Here it is. So the other way was to simply say 7,200 rather, divided by 6 months. This is the 6 months. And then when you get to 1.2, multiplied by the 4 months, which are paid in advance, then you get 4,800. So the moment it is paid in advance, that means our expense was increased. When your expense is increased, your profit is decreased. So the correction, therefore, is to add back your profit. So that's why you see there's a plus here. Okay, we are adding our profit up. All right, and then income tax amounts to 333,564 for the year. Let's see how do we record that. Here is income tax 333,564, and then our net profit after tax becomes 677,236, and then eventually we come up with the final activity. There is the solution for your activity number 2. I want us to quickly move on to activity number 3. Activity number 3 is now from the Northwest Prelim. All right, I'm now slowly moving towards the cash flow statement. All right, so in this particular paper, they gave us a very interesting question. It says, calculate the cash effects of changes in working capital and show all calculations. And this was for 5 marks. All right, and then here is the information that was provided, and then here is the figures from the statement of financial position, and then we are going to start now. Calculate the cash effects of changes in working capital, show all calculations. So what I want you to do in the next 5 minutes, I just want you to look at inventories alone, only on the inventories. I want you to look at the cash inflow or the cash outflow. So I'm going to give you 5 minutes also to go grab a glass of water, and then I'm going to come and join you back in 5 minutes. But already I want you to have calculated this. So when I come back, I want you to tell me, Mr. Simbi, is it a cash inflow or a cash outflow? So I'm going to see you in the next 5 minutes. Go grab. Right back. Welcome back, my good learners. I hope you have managed to crack this one. Okay. I hear someone is saying, Mr. Simbi, I've managed to get the answer to this. Okay, so let's see together. How did you do this one? Remember, this is inventories. So as you are doing that note to the cash flow statement, we're not doing the full note here. We're just doing parts of the note as was demanded in this particular paper. So we're looking at our inventories. We want to ascertain whether there's an increase or a decrease, and then we would know whether it's a cash inflow or a cash outflow. In this particular case, it is important in the exam that you take note of your years. This is 2021 and this is 2022. You should remember to check your years lest you look at them in the opposite way. So if you look at it, it's 682,500 and then it has gone down to 603,750. In other words, we are having a decrease. Now, there has to be a relationship between inventory and cash. And the relationship is that they move in opposite direction. Inventory and cash moves in opposite direction. The moment inventory is coming into the business, cash is going out. The moment cash is coming into the business, inventory is going out. I want you to get that. So when your inventory is increasing, it becomes a cash outflow. But when your inventory is decreasing, it becomes a cash inflow. Get that one. Okay. Now, there is another method, which I call the calculator method, which now remember, when we're doing this reconciliation, you have your note number 4, note number 5, and note number 9. But 4 and 5, these are assets. These are assets, and 9 is a liability. So the calculator method then says, for your assets, simply say previous minus current. Then take whatever the calculator gives you. For your assets, previous minus current. But for your liabilities, you can then say current minus previous. Then you take whatever your calculator would have given you. In other words, if I was looking at this, I would simply say 2021 is my previous, 2022 is my current. And because it is an asset, I'm now going to say previous. So I'm going to say 682 500 minus 603,750. And whatever sign that comes on my calculator, that becomes the answer. All right. That becomes the answer. All right. So this is how it would appear then. So I would therefore say 682,500 minus 603,750. I would get my 78,750. And the calculator itself will tell you that there is no minus in front of the calculator, in front of the amount rather. That becomes a cash inflow. Okay, so the other one is where you clearly understand that when my inventory is decreasing, that means inventory is going out. What is coming in? Cash. Remember, they move in opposite direction. Let me quickly go on to the next aspect. It is your trade and other receivables. Then it says see information D. In information D, we are given the following details in respect of SARS. And then there is your SARS. That means within these amounts, we are having SARS. Let me go and calculate. I need to take out SARS. The moment there is SARS included, you need to take it out because SARS will be shown separately in the face of the cash flow statement. Taxation will be shown on its own in the face of the cash flow statement. So I'll start with my 2021. My 2021, I'll now say how much is it here? It is 256,830. I need to take out my SARS income tax. And how much is that going to be? It is an amount of 12,180. If I subtract that, I'm now going to get an amount which is 244,650. You're going to see down here, I have the same calculations again. I'm going to bring the 2022 on this side, whereby it is your 290,115. And then I'm going to subtract my SARS for that year, which is 7,665. And then the difference, therefore, becomes 282,450. So you then ask yourself, is it an increase or a decrease? You can see it is 244,650. Now it's 282,450. That is an increase. An increase in trade and other receivables. These are debtors, people who owe us money. When our receivables increase, that is a cash outflow. Because when our receivables decrease, that means our debtors are paying us, which is a cash inflow. Okay, I'll repeat that again. When our receivables are increasing, it's a cash outflow. Because when our receivables are decreasing, it means our debtors are paying. That means it is a cash inflow. Or you can use the calculator method, which says previous minus current. How much is your previous? I'm going to show you now in a simpler way. Okay, how much is your previous? 244,650. 244,650 minus my current, 282,450. The calculator will automatically give you a negative 37,800. Yes. Okay. Now, let's quickly go on to the last aspect and then we wrap up this particular question. I want to do a cash flow statement with you. So please stay tuned. There's a cash flow statement coming. And then it says, calculate the cash effects of the changes in working capital and then trade and other payables. Here's the interesting aspect. This excludes shareholders for dividends and bank overdraft. So this one was a walkover. Trade and other payables. The moment they increase, that means we are not paying. Cash inflow. But the moment our trade and other payables decrease, that means we are paying. Cash outflow. All right? Or calculator method. What does the calculator method say? This is a liability. This is a liability. So what then do we say? Current minus previous. All right? What is the current? 390,600 minus 424,200. Whatever sign your calculator gives you, that becomes your answer. Let's see what is going to happen here. All right? Then minus the 424,200, 33,600. Cash outflow. That is the answer. Dear learners, that concludes this particular question. Now, let us go now to the cash flow statement. All right. So I have an interesting question for you here from the Gauteng province. I have an interesting question. Here we go. Here is the Gauteng prelim for the year 2022. Okay, stay tuned. I want to show you a few tricks that were in this particular paper. Now, it says Severance Limited. The information below was extracted from the records of Severance Limited. The financial year ends on the 20th of February. And then what else do they say? Here is the extract of information, another extract, and then we will now begin here. Income tax is given as that. So remember, we're doing a cash flow statement. Here we're going to calculate the tax paid. Tax paid. All right. So we are given balances. So here is a credit balance. A credit balance simply means this was in trade and other payables. A debit balance, this was in trade and other receivables. All right. Let's see how can we do this calculation. I'm going to show a taxation account here. So quickly, I'm going to go run through it. So my opening balance in 2021 is credit. So remember, here is my credit and here is my debit. So I'm going to come here. I have my balance here, which is 160,000. And my closing balance is debit. So I'm coming here, balance brought down 30,000, debit. Remember, my lines are over here. My lines are over here. So it is debit here, under the lines. Then it means it has to be carried down on top there. All right. It has to be carried down. So I'm going to say balance carried down here. I'm going to have my 30,000 here. I'm just going to squeeze it in there. Okay. Because I left another line down there. Now, you will then find that I now need to bring my income tax. I need to bring my income tax. And my income tax is given to be 2,072,000. So I'm going to come here. It is my 2,072,000. 72,000. So I'm not going to add that side. All right. If I add it up, someone please punch those figures. How much do you get? Thank you. 2,262,000. 2,262,000. That means here I'm going to get my bank tax paid 2,262,000. Okay, I know there are several other ways of doing this. I just thought today I should show you the T account. Okay, so as I'm chasing behind time, I'm gonna quickly go on to my dividends. Here is the other way that we'd have calculated it. All right, 2,072,000 plus the 160 plus the 30 to give you the 2,262,000. Then it says the directors issued a further. So here in this particular case, we want to calculate the dividends paid. Dividends paid. So remember, we are just extracting parts of the Gauteng prelim paper. All right. So some of the information I'm going to give you because it was demanded in the first parts of the question. For example, you were required to do note number 7. So information from there was going to help you even when you do the cash flow statement. So some of the figures I am going to give you because of time limitations. So here we're going to calculate dividends paid. And then what we want to see is what are we given? Shareholders for dividends. All right. So here is my last year's final dividends. So the quickest way by now you know to get your dividends paid, it is to simply say last year's final plus this year's interim. That becomes your dividends paid. All right. So when we are seeing here, we have ordinary shares in issue, and then we have 7.5, and then we have 26,250,000. So what we are trying to do here, we want to know what was the number of shares that we were having when we declared our interim dividend, because we know that if we are calculating dividends paid, we can say last year's final, which we have already given, which is 212,000. So we need this year's interim. All right. And they say an interim dividend of 22 cents was paid on the 15th of October. When you had done note number 7, you would have found that the number of shares that you were having when the time of interim dividend were being declared, you had an amount of 800,000 shares. So you would then say your 800,000 shares, which you had at the particular time, multiplied by the 22 cents. And it would give you an amount which is 1 million, or this was 8 million, rather. It is 8 million shares here. It is 8 million shares, not 800,000. 8 million shares multiplied by 22 cents. It should give you an amount of 1,760,000. 1,760,000. Then you would be adding these two now to get your dividends paid. So if you add last year's final, which is 212, plus this year's interim of 1,760,000, you should end up with an amount which is 1,872,000. Remember, this 8 million, you would have to open note number 7 for you to get that 8 million, because at the beginning you'd find that there was 6 million shares at the beginning plus the 2 million that was then issued. That is what gives us the 8 million shares. Or you could have started it from the bottom with the 7.5 million shares at the end, then add back the shares that were repurchased, 7.5 plus the 500,000, it will take you back to 8 million. And then you can declare your interim dividend. Okay, I'm going to quickly now go on to the next aspect, which is my fixed assets. All right, in my fixed assets, I'm going to open a fixed asset account. So because here we want to know the fixed assets purchased, So this is fixed asset account at carrying value. So the opening balance is this one. So I'm going to come here. I'm going to say my balance brought down, which is 13,590,000. And I'm also going to have another balance brought down here, which is this one here, 20,158,970. Okay. And then we're going to come here and it's going to be balance carried down 20,158,970. And then here, remember, you must always have your depreciation. And they're telling us that depreciation is 320,000. So I'm bringing my depreciation here, 320,000. Then lastly, I'm going to bring my disposal at carrying value. Disposal at carrying value. All right. And all the equipment was sold at carrying value, which is 67,590. If you add all of that, you're going to find that you have an asset that was bought here. Okay, let's totalize here. How much do we get? Someone is saying it's 20,546,560. So that means 20,546,560. Therefore, your assets that were bought become 6,956,560. That becomes the asset that we have acquired. Okay. I do hope this does make a lot of sense. I know some of you also know how to do the note number 3 calculation in this regard. Okay. So here it is, fixed assets purchased, 6,956,560. Of course, you're going to bring your fixed deposits matured and aspects like that. I just wanted to extract from the Gauteng prelim aspects that I know might be of challenge. Okay, so let's quickly go on to the next aspect, and the next aspect is going to be a calculation that is very, very interesting. Let's quickly look at that one. All right, so it says in the answer book we're given, remember, this is your 7.5 million, and there is the share capital, and then we're given additional information as well. So we want now to calculate the proceeds on the issue of shares. How much is the proceeds on the issue of shares? They say the directors issued a further 2 million shares at 2.75 Rand. Okay, so let's see how do we record that one. So proceeds from issue of shares, the directors issued how many shares? 2 million. So it's going to be your 2 million shares, and these were issued at 2.75 Rand. That is how you get your 5.5 million. But on the repurchase of shares, then we want to know how many or how much did we spend on the repurchase of shares? For they tell us that 500,000 shares were repurchased from a disgruntled shareholder at 25 cents above the average price. So that means if we get the average price, then we add 25 cents to it. Then we can get the price that we paid for the shares that we repurchased. It is easy because we have some figures. We have the 26,250,000, which is your share capital at the end, and then you divide it now by your 7.5 million. I can do this because after the repurchase of shares, there was no other issue of shares. If a new issue of shares occurs, it will then change the average price. So I can do this because after the repurchase of shares, there was no new issue of shares. Then if I divide this, I'm going to get an average price of 3.50 Rand. So if I get my 3.50 Rand, that is average price, and I'm told here I paid 25 cents more or above. So I'm going to add 25 cents here. That means it becomes 3.75 Rand. So on the repurchase of shares, therefore, I'm going to say 500,000 shares multiplied by 3.75 Rand. This was a very interesting question. Okay, very, very interesting question. All right, I want us to look at the next aspect in this cash flow statement. The next aspect that the Gauteng paper brought was the calculation of the net change in cash and cash equivalents, which I know most of you have a problem with. Let's see how could that be done. So remember, we are given the 2021, which is your 147,500. Okay, so the 147,500, remember, it is a bank overdraft. So you would then say 2021. You would start off with your 72,000 here, then minus the 147. That is why you have a negative 75.5 here. And then you take your 2022 amount. There is nothing under the payables, so there is nothing here. You can see it's 0. And then under my assets, I have cash and cash equivalents of 1 or 2. Okay, so I'm now going to calculate going up because this is what we were supposed to calculate. So I've heard some of you say you can flip the signs, or when you go up, you subtract. Either way, whatever is easy for you in the exam, the idea is to grab as many marks as possible. So you are saying on your calculator, 102,000. If I flip the sign, it's a minus 75. So if I switch the sign, because I'm going up, I switch the sign, it's a minus, so it becomes a plus. So it's going to be 102 plus 75.5, which gives me 177.5. I switch the sign. You get that? So be careful of that. And in the exam, you must be able to prove it going down. That is, if I have my 177 and now I'm going down minus 75.5, it should give me the 102. The moment you can't prove it going down, that means you made a mistake on your way up. You must be able to prove it going down. Okay, so this was another aspect in the Gauteng prelim paper. Now, it's going to take us now to the calculation of financial indicators. Again, we are in the Gauteng prelim for the year 2022. Let's see a few calculations that were in this paper. It says, calculate the debt equity ratio. Debt equity ratio. So we're going to calculate the debt equity ratio. And then it is your non-current liabilities as to shareholders' equity. All right. So your non-current liabilities, it is your long-term loan. There it is, your 480. But when you come to your shareholders' equity, remember, it is your ordinary share capital, which is your 2.2 million, which is what you see here, plus your retained income. All right. Remember, note 7 and note 8, which is your 750, which is what you then see here. All right. So if I then add this two, I end up now with 2,950,000. Now, how then do you get to this answer? All right. This is what I always say. I'm going to write it down here. I'm going to write it up here rather. 480,000 as to 2,950,000. All right. How do we solve it? You divide everything by what is on your right hand side. So you're going to divide everything by 2,950,000. That gives you 1. You come here, you divide it by 2,950,000. That gives you 0.2. This is what we see here. Are we cool? All right. Now, I want us to quickly move on to the next aspect because we are now behind time. Do you think it was a wise decision to borrow the 1 million? Okay. Comment and quote 2 financial indicators with figures to support your answer. Remember, guys, what the examiner is asking is what we must give if we're to make it. What do they want? They want us to talk about the idea of borrowing the 1 million, and then we must comment and we must quote 2 financial indicators with figures. Okay, so what do we have? We have the debt equity ratio as well as the return on total capital employed. What do we say? Was it a wise decision? Do you think it was a wise decision? So your first answer has to be either yes or no. Yes. So you don't start explaining why you're supporting the yes, then at the end, then you say, yes, it was a wise decision. Most of you start by doing that. You start explaining the debt equity ratio decreased, therefore it was a wise decision. No, make it easy for the person who's marking your paper. Yes, give us the supporting evidence now. No, then give us the support. Remember, in the support, we need financial indicator, that is the name, in this case, debt equity ratio with figures, and then here is the figures, and then we also need to see the trend. Is it increasing or decreasing in your commenting? And then you will pick up some marks. In this case, they say the debt equity ratio decreased, okay, from, remember we just calculated it, now it is 0.2:1. So it decreased from 0.5:1 in the year 2021 to 0.2:1 in 2022. This you can do. I promise you, this you can do. All right. So you are simply saying from the year 2021, it was 0.5:1. Now it has decreased. The word decreased is very important. It is what you use to show us the trend. Is it an increase or a decrease? So don't leave the word decrease or increase. That is very important. Not to forget that you need to quote figures. Quote figures. So it is decreased from 0.5:1 to 0.2:1. Or else you can give us the difference. It has decreased by 0.3:1. When you're commenting on your return on total capital employed, you are now saying it has decreased from 19% to 17%. Okay, it has decreased from 19% in 2021 to 17% in 2022. That is very important. We need to know where is the 19% from which year? 2021. And it has decreased to 17% in 2022. Okay, so it has decreased by 10.5%. Be saying, Mr. Simbi, where are you getting this 10.5%? You would say 19 minus 17 gives you 2. 2 divided by 19, okay, you can multiply by 100, it gives you your 10.5%. So the decrease from 19 to 17 is a 10.5% decrease. You need to explain it in that way. Okay, so you can't say it has decreased by 2%. It has decreased by 10.5%. Please get that aspect correct. Okay, it has decreased by 10.5%. If you are going to use the 2%, you would then be saying it has decreased by 2 base points or 2% base points. 2 percentage base points. That is how you then explain it. Okay, the company is lowly geared and borrowing has decreased. And we also say there's positive gearing as our return on total capital employed exceeds the interest on loans of 9%. Okay, and then SUSA Limited has a low risk and there is positively gearing. We are positively geared. Okay, now I want us to move on to the next aspect, which is very interesting, which I know most of you have a challenge with. Comment on the dividend policy of SUSA Limited. Dividend policy. The other questions come and say, calculate the dividend payout rate. And you know, if you're to calculate your dividend payout rate, you're saying it is your DPS over your EPS, and then you multiply by 100/1. This gives out the dividend payout rate. But they now want you, when you have the dividend payout rate, to calculate, to comment on the dividend policy. Okay. Now, if you come to the year 2021, let's start in the year 2021. Our DPS in 2021, our dividend per share was 65 cents. You can see there. And our earnings per share is 105. And we have given 61.9% or 62%. What does that mean? Of the earnings that the company received in the year 2021, the company has distributed dividends which are equal to 62%. Are you still with me? Okay. In 2021, they distributed 62%. That means they have retained 38% because they have 100% of earnings to distribute. But they have now given only 62% of those earnings as dividends. That means they have retained. To retain is to keep. They have kept 38%. For reasons, it could be expansion or it could be so that they have a better cash flow position. If you look now in 2022, that the earnings, the dividends rather, are 24 cents. Here's your dividend, 24 cents. And the earnings are 93. So what percentage of your earnings are you getting as dividends? 26%. Okay, so if you then compare now, you are saying the company has given 26% of its earnings as dividends. That means they are retaining 74%. Okay, of the 100% earnings that the company has made, they have distributed only 26% as dividends. Therefore, they have kept the remainder, which is 74%. Now, we then compare the year 2021 and 2022, whereby we now say in 2021, we gave 62% of our earnings as dividends. But this now has decreased in 2022, whereby we are now giving only 26%. It could be that we want to be able to have a safe cash flow position, or we are retaining so then we can expand our operations. Okay, now, here's the next question. The managing director currently holds 51% of the ordinary shares. The authorized share capital of ZUSA Limited is 1 million ordinary shares. At the beginning of the financial year, 75% of the shares were issued. The company was to issue another 200,000 shares. What percentage of shares would he own after the new shares are issued? Here it is. If we have issued 75% of the 1 million, that means we are having 750,000 shares. And for one to be holding 51%, that means was holding 382,500 shares. Okay? If the company was to issue another 200,000 shares, that is the question now. If we are going to increase that 750 by 200,000, how many shares will we be having? We'll be having 950,000 shares then. And then remember, his number of shares are remaining the same as 382. What percentage of shares would he own? So you say now the 382,500 divided by the new number of shares if we're to issue the 200,000 shares, and then you get 40%. This is a very, very important question that you have to master, because it at times comes and say, if he has this, how many shares should he then buy if he is to become a majority shareholder? So you have to know how to calculate this particular question. But this one was talking about the person who's already a majority shareholder. This was a bit more in reverse, because you have seen whereby he's not a majority shareholder, then he has to become one. But in this case, he was already a majority shareholder. Then they issued more shares. The moment they issue more shares, some say it will dilute his number of shares. Then it means he is no longer a majority shareholder because he's now holding 40%. Remember, for you to be a majority shareholder, you need to hold what? 51%. You also know of the 50% plus one share. Okay, but I always tell my kids, you can use either of the methods. 51% is what we were given in this particular question. Okay, my dear friends, it has been a pleasure and a joy to have you in today's class. And I do hope that you're going to join me again in the next class as we look at more complicated questions. Until next time, please remember, the examination is around the corner. You can never get good marks if you don't practice. There is no time to waste. The time to work is now. And I do trust that you're working hard, putting in all the hours. Hard work always pays. Until next time, it is me, your accounting teacher, Mr. Simbi. Please take care, continue practicing. Cheers and goodbye.